Hi, this is Dan with Invest Rent to Own. Thanks for watching me today. I appreciate you joining me time and time again to learn more about real estate. Today, we're going to discuss self-directed IRAs and how you can use that to your advantage in your real estate portfolio and investing. An overview for you. What is a self-directed IRA is the first thing I'll cover. Give you some details about the what. I'll give you some example brokerages. How to use it specifically to acquire real estate, some rules that you will need to follow as you're managing your self-directed IRA, using a rent-to-own within it, and how it can benefit you. I'll give you the example of my individual case and how I used it in my Roth IRA, and then some tips on how to get started. So, what is a self-directed IRA? It's an IRA that doesn't just own stocks. You can own limited partnerships, LLCs, you can own gold or precious metals, you can own real estate, you can even own notes for private lending. You could have it as a mortgage for real estate as well. Lots of different examples. You can buy tax liens with it. So it gives you flexibility just above not just the stock investing. You can still own stocks in a self-directed IRA. It's just not just restricted to the typical Wall Street. What are some brokerages? There's a few that I've listed there. I have used in the past Forge Trust, and I recently switched mine over to IRA Resources. They go by IRAR. How did I get mine set up? I actually used this service here, IRA 123. I'm sure that you can do some Google searches to find out some additional ones that are out there, but these are the ones that I'm most familiar with. How does it work? You at the top establish an IRA account with a self-directed IRA. You then transfer or make contributions to this IRA fund. You then also set up an IRA, that is an LLC, which you then direct your IRA to buy the shares of the LLC. That becomes your transfer of money that moves all the money from your IRA into a checkbook that you've set up or a checking account that you've set up in the name of the LLC. From there, you as the manager are directing the affairs of the LLC, and you do that by buying real estate and collecting rents, paying expenses for the real estate and collecting income from the rents. And so you can use it to do all sorts of real estate transactions. Buying real estate, renting real estate, selling real estate as the manager of this LLC. The only thing that's a little bit special about it, it works just like any other LLC that you would do. You just have a few transactions that you need to not do to not lose the tax status that you have with your LLC. You can set it up with either a traditional IRA or a Roth IRA. You can also set it up with different kinds of accounts, 401ks, SEP. I don't know. I don't know all of them. They're all listed out there. I use mine with a Roth IRA is what I do. The rules that you need to make sure that you follow, you're not allowed to hold any collectibles, an S-Corp, so it has to be a single member LLC as I understand it, to use the strategy that I described earlier. You can't use life insurance or can't hold life insurance in it. And you have to not do any of these prohibited transactions. These transactions are set up by the IRS to make sure that you're not getting an unfair advantage or you're not breaking what would be reasonable rules. You're not allowed to do any self-transactions, so you can't do sweat equity in this case. You can't buy a house, then go work on it for free, and then put all that free benefit into your IRA. You can't have a transaction with an IRA beneficiary. So if I listed somebody as a beneficiary of my IRA, I can't be paying them to do the work on the house. No transaction with your spouse, parents, or kids. Notice absent here, you can with your siblings. You can do transactions with your siblings. They just don't want you to take money from a parent, like an inheritance or something like that, or pass it on to a child. They don't want any generational investing. But stuff that's on the same level, they're okay with that. I actually have my IRA is partnered with my brother's IRA in the real estate transactions that we do. You're limited by the same kind of contribution limitations as normal investing. That's usually $6,000 a year, unless you're over 50, and then you can do an additional $1,000. You can get a loan with a real estate transaction. There are some restrictions about the loans that you get. You're not allowed to exceed 50% loan to value, and the loan has got to be a non-recourse loan, so you cannot personally guarantee the loan. And then this UDFI is whenever you use loans within your IRA, there's a benefit out there, and so you will end up paying some tax as a result of that. How do I use my self-directed IRA? I actually don't use any loans at all. I just buy cash, collect rents. I sell it to rent to own so that I'm collecting a high rate of return, usually a 30% or more per property on an annualized basis. And that's what... So, how would you apply rent to own? Well, the way that I did it is that you buy a cheap house for cash, and then you sell it on an 18-year land contract, and then you repeat. And here's actually my spreadsheet that I keep track of the value of my IRA. You have to report it every single year so that you report it to your self-directed IRA and they report it to the IRS. So back in 2011, just prior to this, I had $45,000 in a normal brokerage account that was a Roth IRA. I transferred it and then bought a house and immediately sold it on a rent-to-own contract. I then realized I could invest some in stocks, and on it went. Bought another property, 2 more in 2014, another one in 2015, 2 more in 2016, 1 more in 2017. I did at this point begin to reinvest in a previous property. So this is the value of it going down as the rents are collected, and it's less future value. But then I fixed it up and sold it. Bought some more property, on it went. Today it's worth $845,000. So, I mean, it starts small, but eventually, over a 10-year period of time, I've grown it from $45,000 to $845,000, all tax-free. One sad part about it is, man, would I like to take, another international vacation or something like that with the growth of this, but I've got to wait till I'm 59 and a half before I can take any money out of this. But can you imagine what another 10 years, 20 years of growth of this will look like for retirement time? And what I'll be able to pass on to my children in forms of a Roth IRA inheritance to them when it comes time. Pretty awesome. So, how do you get started? If you don't have an IRA, you've got to start one. You got to start building those contributions year after year. If you start it in that first quarter of the year before April 15th or whenever the tax deadline is due, you can put last year's contributions in for this year. So at this point, I'll be releasing this one in February or March, this video. You can do a 2021 contribution and then a 2022 contribution. Then when you've got enough money that you're ready to invest in some other assets other than stocks, open a self-directed IRA, transfer that money in. I would recommend these guys, very professional. These are the Safeguard guys I use to set up mine. And then you transfer all your assets over and you start buying property. It's that easy. I also have got another video out there that goes in specifics about how I turned the $45,000 into the $845,000. So I'd encourage you to watch that. If you did enjoy this video, I appreciate if you give me a like, a thumbs up. And if you have not subscribed to my channel yet, I appreciate if you subscribe. There's more content that I'll be putting out, and I know that you'll enjoy it and learn from it and benefit from it. Again, this is Dan with Invest, Rent, Own. Looking forward to our next meeting.